All right, now to our first conversation. The Securities and Exchange Commission of Nigeria has published new rules relating to the issuance, exchange, and custody of digital assets in the country. This comes 20 months after the Commission initially issued a statement on how it would classify and treat digital assets. This is contained in a recently released document titled New Rules on Issuance, Offering Platforms, and Custody of Digital, essentially legalizing digital assets such as cryptocurrencies in Nigeria. Well, joining us now to discuss this is Senator Ihenya, President, Stakeholders in Blockchain Technology Association of Nigeria. That's CBAN. Great to have you join us.
Always a pleasure.
Yeah, so it's another first. We were the first to launch the CBDC, the Central Bank Digital Currency, that's the e-Naira in Africa, and now we're the first to offer guidelines concerning cryptocurrencies in Africa. How did you see this development?
I think it's a wonderful development. It's very commendable to have Nigeria really blazing the trail when it comes to regulation of digital assets or virtual assets. Indeed, over the years, it hasn't been a very easy journey for Nigeria, especially from a Central Bank of Nigeria perspective. But it's very commendable to have the regulator of the capital markets, that's the Securities and Exchange Commission, finally take that bold step to bring in some sanity to the crypto market as well.
Quite interesting. But looking at the guidelines now, which of these guidelines actually stick out for you?
Well, generally, I think that the SEC has done a good job ensuring that all of the players in the virtual asset service sector are brought in. This is the first time, it's quite significant, to have a regulation that recognizes all of the players in that space. This, namely, the exchanges called the digital asset exchanges, the DAX. We also have those called the digital assets offering platforms. These are guys that will ensure that anyone or any sponsor or issuer that is introducing any digital assets in terms of ICOs and all of that will have to go through these platforms. We also have generally the virtual asset service providers, which covers almost everyone in the space. And lastly, the DAX, called the digital assets, what's it called, custodians.
Right.
These are guys who will be storing, securing and maintaining the safety of these digital assets. So it's quite significant. What stands out for me, really, apart from the recognition, it's a bold step. And we have to commend that. There will always be room for improvements. Over the last few days, there have been reactions from the operators themselves about certain requirements that have been stated in the rules. First, for digital asset exchanges, in order to get license, you have to pay as much as 30 million naira. 30 million. Registration fees.
Okay.
And then you also have to have a paid up capital of 500 million naira. And if you look at that and against the background of a nascent industry, an emerging industry, where innovation is still trying to catch up, with needs in the space, you don't want to introduce licensing fees that stifle that innovation, especially from a local innovation perspective. The players in the space are still very much the biggest players in the space are the international brands. They are foreign brands, although you also have local service providers. You want to ensure that you are creating a fair market, an open market. So on that score...
Do we usually have offerings from Nigerian cryptocurrency makers?
Yes. There are certain projects that are or made offers, you know, in that space through, initial coin offerings. Some of them also go through what you call initial DEX offering, which the rules did not quite catch. But I think that it is important for us to have in mind all of the players in this space, and for SEC to also look at having a regulation that takes care of not just the licensing. We need to have a fair market. We need to focus on requirements that encourage transparency, requirements that encourage efficiency. And then, of course, you have to protect the consumers. In trying to protect the consumers and ensuring investor safety, you also want to have a balance. You want to be sure that you are not keeping away or driving on the ground some of these local innovators that still need a lot of help.
Because it's quite a risky market.
It's quite a risky market, actually.
Yeah.
You know, this is why as the president of a self-regulatory body in the virtual asset space, we continue to ask or advocate that we have some kind of regulatory sandboxes. Nigeria did not go through that journey of encouraging innovators through this regulatory sandbox framework so that they would know how to really grow these guys. There's what you call developmental regulation. This is the time when innovation is still just coming up. The space is still nascent and emerging, such as the crypto
So we shouldn't be talking about fees, registration fees at this point?
It shouldn't be too much of the fees. Okay. We should be looking more like regulatory sandboxes to bring the innovators together, see what they are up to, try to minimize the risk while also maximizing opportunities for them in a test tube market, just so that you see what you really need to do when you eventually bring the licensing.
Right.
It shouldn't
and talking
start
about
with the licensing.
Licensing, you know, about 30 million naira, you know, for registration as, you know, a crypto offering or whatever, an exchange. Where would those monies be paid to? Because we still have that CBN circular that you cannot carry out crypto transactions through the Nigerian banking system. So how does the SEC, you know, intend to get some of these payments, you know, if these crypto companies cannot pay through the banks?
Very fine question, and that's the question out there, and it's a big question no one has answered yet. Unfortunately, the Securities and Exchange Commission, in releasing this regulation or rules, did not introduce the rules to the public. So we didn't have the opportunity to understand the regulatory philosophy of the SEC. We didn't understand where it was coming from or going to. It was just released to the public. If the SEC had introduced this, as it usually does, I think members of the public and players in that sector would have understood what next.
There was no exposure draft.
There was also no exposure draft to members of the public, I would say. But I'm aware that exposure drafts were made available to certain players in that sector. Now, having said that, the critical thing is, with the SEC showing interest in this space, how has the SEC also tried to get the support and collaboration of sister agencies in the financial services sector? We all understand, and we still are aware, that the CBN restriction in Nigerian banking and financial system, as far as cryptocurrency is concerned, still stands. And so there are questions being asked about whether the SEC worked, you know, in line with the CBN. Is the CBN aware? What next? Are we supposed to pay these fees? Are we supposed to do P2P transactions too, to pay to the SEC? So the questions are out there. But this is what I think. I think that the CBN must be aware, of course, of these rules. And if we look at the bigger picture, really, in terms of national security, in terms of the need for financial stability, in terms of consumer protection, investor safety, this SEC, CBN, NDIC, NITSDA, they are all on the same page there. there is no contradiction regarding the need to actually have a safe and sound system. Where we have certain contradictions or might be how or what do we classify cryptocurrencies as, and how do we really regulate them from a point of view of terrorism financing and money laundering
yeah,
and all those illicit transaction issues. So I am happy to say that the sector, the virtual asset service sector, we have had the opportunity to sit in the same room with certain concerned agencies, such as the Nigerian Financial Intelligence Unit, NFIU, who has correctly identified the need for Nigeria to have a regulatory framework that helps to minimize or avoid issues around money laundering and financial and terrorism financing as far as virtual assets are concerned. That is a superb move. What we need now is for the CBN to also come out and acknowledge that, yes, we all agree that virtual assets could be potentially used and have been used for illicit transactions. But we don't want to throw away the baby with the bathwater. We understand that this is the future of finance. Therefore, it's not all about cryptocurrencies being bad. Cryptocurrency isn't bad. It's a financial technology. If you hold a knife and I use my knife to cut that onion and you use yours to stab someone, does it make the knife bad? So it is the use case uses. What do you use cryptocurrencies for? Focus should go to compliance. And the banks, the traditional institutions, they have fine experience when it comes to ensuring AML and CFT compliance. Why don't you empower and encourage these players to beef up and improve and boost their compliance mechanism, rather than say, we don't want cryptocurrency in there? So as we can see, the SEC has rightly and finally identified cryptocurrencies as some of security, if it has those features.
And I'm talking about,
yes,
being classified as securities. That's a different ballgame. We've seen how Ripple has been battling, with the SEC in America, that Ripple is a security or not. But I'm wondering, how do we, move forward with that here in Nigeria, knowing that most of these offerings actually come from abroad?
Okay. The brilliant thing that the SEC did before now, I think sometime in September 2020, was to, give us a philosophical understanding of what financial or digital assets or innovations were and the role that they can play. And in doing that, they classified cryptocurrencies into 4 major categories. One is as a security, 2 as a commodity, 3 as a derivative, and of course you can have collective investment funds. Now, in doing that, the SEC was aware that it is possible for you to argue that your coin is not a security, right? That's why it says that if certain features are there, they would be able to tell you whether or not you need to come for security registration. It is the same principle that the SEC has applied in its rules, which it just released last Friday, by saying if you are a security or if you are issuing any digital assets at all, just write to us. Let us see your white paper. If we consider that it's a security, we'll let you know in 30 days. If it's not, you'll also be guided on what it will be. Now, in Nigeria, we just need to understand that there is what we need to be a country that takes rule of law very seriously. Rule of law is critical to business. You can't talk about foreign direct investments if there is no rule of law. You can't talk about foreign direct investments when people don't have trust and confidence in the system. There are certain things that some of our agencies might do, good intention, but sometimes the effects could be pretty bad. And the ripple effect affects FDI, affects remittances, affects everything.
Yeah, well, I saw a report recently that said that it showed that the ban, that CBN, put on transactions through the financial system actually had an impact on foreign direct investment. And I'm wondering what was the connection, because this was about cryptocurrencies.
Yes, certainly it had an impact, negative impact. First of all, on the economy, and I have to say, security as well, national security. Talking about the economy, I mean, I'm a lawyer in practice, right? And what I do is try to do business with people who also want to invest in a country. I know how many clients of ours have had to suspend their direct investments in Nigeria because they are not sure of what next regulators will do, because there was no clarity. Investors need clarity. They don't need confusion. Investors also need confidence. So when a regulator imposes certain fines and then begins to disrupt the whole space, and the whole country is all about how banks have been fined because they transacted or facilitated crypto. Yes, the regulator is doing its work, but the negative effect is pretty bad because it scares investors. They begin to ask questions.
It's a balancing. We need some kind of balance, when it comes to protecting investors and also attracting investment. Well, we'll continue the conversation, Senator. Do stay with us. We'll continue the conversation in just a moment. Do stay with us. This is Business Morning. Welcome back to watching Business Morning live on Channels Television. We've been discussing the Securities and Exchange Commission new guidelines on cryptocurrencies in Nigeria. And I still have with me in the studio Senator Ihenya, President, Stakeholders in Blockchain Technology of Nigeria. Thank you for staying with us. And, still talking about these guidelines, I saw that it requires that applicants pay 100,000 naira for filing application fee, 300,000 naira for processing fee, 30 million for the registration fee, which we were talking about earlier. And I'm wondering, what's the practice, in other countries when it comes to, how much these companies pay for registration? Is it the same with this prices we're seeing here?
Well, Nigeria is taking the first step ever within the continent of Africa. So we might not have other regulations to, really just oppose it with. But in other climes, talk about Mauritius, for instance. It's actually in Africa. Mauritius, talk about Estonia, talk about places like Cayman Islands. The idea really is to keep the fees within the administrative discretion of the regulator. It's not usually stated precisely, and this is so that the regulator would have some way of determining what the fees would be, depending on the nature, right? The nature of the applicants coming forward. You will agree with me that we have very big exchanges, for instance, out there. And there are also exchanges that are not pretty big. And
they carry out incredible amounts of transactions.
Exactly. Yeah. Those transactions they carry out, the money don't belong to them, but it goes through them.
So what they make in fees, though, it's quite a lot.
Yes, but it depends on the transaction fee. Because it's an emerging industry, the transaction fees are really almost very, very minimal. And it's interesting that at the end, the very tail end of the rules, the SEC also indicated that they will now be entitled to some of these fees as well. Yes, it's provided there that every transaction going on, the SEC will be entitled to fees. And the SEC also has the power an authority.
But this covers just Nigerian exchanges, right?
It covers, for this? Yes, it covers exchanges, not Nigerian exchanges, any exchange that is incorporated in Nigeria, and also exchanges that aggressively target Nigeria. So there are exchanges that already see Nigeria as a very big market.
Right.
They are not incorporated here, but they are able to target Nigerian markets. They also fall into this regulation. So I think that the SEC will just need to be a bit considerate, because all fingers are not equal. Right? They also need to understand that it has to be risk-based. And that's why I talk about the focus should be on transparency and fairness and efficiency, rather than trying to block the door with high licensing fees. Some of our members in my association, CBAN, already wrote to my office saying that this regulation is just pretty much saying, you guys should get out of the markets, right? That is what it means to them.
So it's a barrier to entry.
So it's a barrier to entry, which shouldn't be so, because the SEC, as I understand it, is to ensure that there is fairness in the markets. The market is also open, but there will be mechanisms for consumer protection and investment safety.
Because it's all about, protecting the consumers.
It's all about protecting,
that should be the focus.
Yes, not stifling innovators. As a matter of fact, I received one of the notices or letters I received on Friday was that we might need to also now apply for the startup bill to apply to the virtual asset space. Because the idea of the startup bill is to also encourage innovation, especially support startups and local players to be able to also play.
Bridge into the cryptocurrency.
Yes, we now see that we need to have that conversation so that the virtual asset sector is also considered when the startup bill is passed into law.
Does the guidelines say talk about NFTs, non-fungible tokens? Because we know that one has been raining this year. It's all about NFTs. You're selling virtual assets like virtual lands and the JPEGs that sell for incredible amounts.
And NFTs have grown big time. Non-fungible tokens, they have grown in the last 1 year massively. And a lot of billions of dollars is going there daily. Does it cover NFTs? Now, what the rules have said is it covers digital assets. And if you look at what digital assets mean, it's a very broad term, which brings in all of the virtual assets, including cryptocurrencies. NFTs will also fall in there. NFT is a token, so it falls into digital assets as well. How would that happen? You know that when it comes to NFTs, it's really about ensuring that you have some digital rights over digital art, digital collectible, digital certificates, tickets, and all of that.
I'm guessing companies that want to actually mint some of these NFTs will also have to
Yes, it's very possible. We see the entertainment industry, for instance, players in that sector will, in no time, start issuing NFTs, for the purpose of building fan base. Some clubs in the UK, English clubs are already doing that. They're creating fan tokens, right, built around NFTs. Stars, African music stars can also get into this easily to build fan base. The issue what we should do is to try to look at regulation from a developmental point of view. One of the agencies in Nigeria that I have a lot of respect for when it comes to the idea of developmental regulation is the National Information Technology Development Agency, NITDA. The idea, they come into the space with that idea that with regulation, we can expand the markets. With regulation, we can create jobs. With regulation, we can create revenue for the Nigerian government. With regulation, we can do a lot of stuff. So what should we do? We should focus on principle-based, risk-based approaches that ensure that players are able to get into those innovations and build stuff, and as well, at some point, the licensing comes in. if you look at the data privacy, data protection space in Nigeria, which NITDA has been regulating for some time now, it's not about licensing. It's really more about the meeting minimum standards so that people can begin to appreciate, first of all, how valuable personal information is. Because when we talk about data-driven economy, it's all about the personal information. And this is why I also think that the Central Bank of Nigeria should look at the entire economy of the, you have to really look at the economy. We need to create jobs. We need to let innovation thrive while also maximizing, minimizing risk. The idea that I think that the CBN should be driving in that space, seeing that adoption of cryptocurrencies and digital assets is unstoppable, is to focus on compliance, anti-money laundering, and countering of terrorism financing is the way to go. And the CBN did get it right in 2017. That's why I am still very confident that at the right time, the CBN will do what is right.
Right. All right. So talking about raising funds and invest, there are also limits to, what these companies, these offerings can actually raise. And there are also limits to what investors, would-be investors, can invest in the cryptocurrency market. How do you see those limits?
Oh, those limits, the instant reaction when some of us saw that was to say, wow, this is pretty too limiting, especially for the retail investors. For retail investors...
Something about 200,000 naira.
Yes, 200,000
per month or?
200,000 naira. And by the end of the year, nothing more than 2 million naira by the end of the year. So it's pretty limiting, right? We feel that the SEC might have considered starting from there because we are just taking the first steps.
It brings to fore the don't invest what you can't afford to lose.
You can't afford to lose, yes.
So
yes.
I think that should help.
Yes, it should.
Yeah.
But we think that at some point, the SEC might want to categorize retail investors into subcategories, so that you don't put all retail investors within that very limiting ceiling. It's quite limiting for some level of retail investors, especially retail investors that have a lot of knowledge about investing in digital assets. I like the fact that the SEC has also encouraged virtual asset service providers to invest in education. It said a lot about that there, meaning that your users, the investors, need to understand what they are investing in. That's beautiful. Now, having said that, the SEC may want to, introduce subcategories under the retail investor.
Maybe for more experienced.
For more experienced investors or persons who can show evidence that they have sought investment advice from a registered or some known professionals before getting money in, right? The idea. Why this is important is this. The idea of blockchain, crypto, is decentralization. And when you talk about decentralization, people want to do stuff in certain ways that are not too centralized. In doing so, the SEC needs to work more. This is why we talk about collaboration too. In other climes, such as the US, for instance, the idea of self-regulatory organizations, SROs, is really penetrating that market. Because regulators are saying, we don't think we are quite ready for this sector. But so that we can ensure consumer protection and investor safety to some level, we are ready to work with SROs so that players in the market can adopt best practices, But right now, before now, it was a matter of we're not looking at that space yet. And while you're not looking at that space, bad actors are looking at it and doing crazy stuff in that market. As a regulator, you don't want to allow that keep happening.
Talking about bad actors, we've seen some Ponzi schemes, make record amounts of money in this country, and some of them actually pose the whole blockchain story, how they're related to cryptocurrency. Will these regulations help sort out the chaff from the cryptocurrency market?
I believe it will. It will, because bad actors take advantage of lack of clarity in the markets, take advantage of lack of regulation in the markets. So to some extent it will. But again, it doesn't mean that bad actors will be,
totally out of the
closely
market.
out of the market, because it's very clear. This crypto blockchain, it's a huge opportunity. You will always have good actors and bad actors. What you want to do is to ensure that you're encouraging the the good actors to stay good,
and discouraging
the bad actors.
Right.
And good actors have a way of getting to know the bad actors way before the regulators do. And that's where the idea of self-regulation comes in.
Quite interesting.
Bodies like CBAN, bodies like FinTech Association of Nigeria, they can't act as self-regulatory
be able to identify some of the money grabs.
To tell you that we don't know this guy.
Yes.
He's not part of our association.
The ones that claim to be solving one problem, but actually not solving anything.
Exactly.
Just want to take money and move. Well, we've seen a lot happen in this cryptocurrency space. It's not an easy space to regulate.
It's not an easy space.
Really not easy, but it's a good move, and it's good to see that the SEC is actually looking at, regulating the space and releasing guidelines at this point. But we'll keep tracking those guidelines and to see how the operators actually react to this. Thank you so much, Senator Ihiere, President, stakeholders in Blockchain Tech of Nigeria. It was great having you on the program.
Always happy to be here.